experience, what ultimately boils down to the fact is that a lot of us lack the kind of confidence, right, in making financial decisions. This could be for the reason of, let's say, lack of knowledge or never having taken interest. And at the same time, when we do not have sort of the confidence to do things, then we ultimately lack also this control. Yeah. Um, this typically then leads to us feeling completely out of sorts. I'm not saying this happens with all of us, but in a lot of the situations that I encounter, especially with my clients, I do sense this feeling that women do not have full control over their financial matters, right? So then the question comes like, okay, what can we do about it? What's the next step? How I usually start working, right? And this, of course, applies to all kinds of people, including men, women of different stages. You need to always start by asking the right questions. And this often means asking the tough questions as well. Yeah. Um, and first, because of course we are looking at finances, right? We're looking at number crunching. So the first set of tough questions are got to do with how we are spending money, right? How much are we saving? What are we doing with our savings, right? And then taking a look at what assets they we have built from our savings till now. Yeah. Um, if we have any loans, yeah, what do we do with those loans? How do we repay? How do we plan to do all of that stuff? Yeah. So these are the first set of questions that we always start with asking ourselves. And the second set is more difficult. Yeah. This has you thinking about, okay, what do I want to do with my money? Yeah. What am I trying to achieve? What are my priorities in life, right? And one thing which all of us need to start thinking about is, have I prepared myself for the long, sort of, hopefully the long, healthy life that is ahead of me? Now, it is a common known fact that especially for women, the life expectancy is much, much higher than for men. Yeah. On average, especially let's say in European countries, women live to at least the late 80s. So now at this point of time, all of us, whether we are in our 20s, 30s, 40s, 50s, we still need to plan for the long term ahead, right? And then comes the big what ifs, right? Sometimes they, of course, are very uncomfortable for us to ask ourselves. What if something happens to me? I'm not able to, let's say, earn the way that I'm doing right now. What happens to my family if I'm not there? What happens if my partner is not there? Right? And what if we separate? So, all of these big what ifs in life are something that we really need to pause and think about. They are the most uncomfortable questions, but they are also the important questions which help us at least get ourselves financially prepared for the future. Yeah. So this is what we usually start with, asking ourselves the questions. Now, once we have, let's say, done that, right, then what is the next step? It always starts with starting to save money. Whenever we are thinking of any kind of a financial sort of, let's say, creation of wealth or, trying to achieve the goals, it always starts, of course, with once you have saved some money. And this is also something, where we, in our experience of working with people of different ages, right, different situations, life situations, so we have also understood that there is a pattern to this, how people usually save money. And what at least we as financial advisors would recommend all of us as the ideal saving situation for your family income is something like this. Yeah, as I said, life situations make a lot of impact on this. So when you are single, let's say 20s or 30s, right? So this is where your ability to save money is also pretty good, right? Um, Then, when you move to the next stage, let's say when you have a partner in your life, then it becomes actually even higher because the kind of the shared expenses that you can have, yeah, lower your total expense base and your savings. I mean, if you are sort of, careful about not having this lifestyle situation creep in where you're spending a lot of money on, let's say, holidays, fancy restaurants, you can actually save up to half of your income, yeah, if done properly. And then comes the next stage, yeah, when you are in a family situation, when you have kids and their schooling, and then later on probably their college, you need to start saving for them. This is the situation where your ideal saving situation goes down significantly. I am personally in this situation. I am in my mid 40s. I have two kids, almost 15 and 12, and I know how difficult it is to sort of save even 20% of our family net income. And then, of course, it bounces back. When you are at your later stages, when the kids are out of the house and they are independent, that's where you can again start saving more. Now, this is just to give you a broad idea of that no matter what situation or life stage you are in, there is, of course, a great potential for saving. Yeah. But then, just saving is not important. We need to do it in a proper way. That's how we always guide our clients. The easiest thing is to start budgeting your expenses. Yeah. And I will share a link here where you can, use the QR code and download a financial template, which helps you do this monthly budgeting, right? What are your fixed expenses? What are your variable expenses? How much are you spending? Once we start taking note of every euro spent, I know it can be boring at the start, but it makes a lot of difference. It helps you identify the areas of cost savings, helps you achieve these kind of ideal savings which you can have, right? Now, when you start saving, yeah, no matter at what stage you are, if you have started saving, when you are in your late 30s or 40s, the first financial goal is to create an emergency fund. What is an emergency fund? It should be at least 4 to 6 months of your monthly expenses. Yeah. At any point of time, yeah, you should have this emergency fund set up and set aside, right, to take care of, as the name suggests, those unforeseen circumstances. Especially in the current situation, economic situation, it is not very unheard of that people are getting laid off, or there is a significant job cuts happening in even biggest of companies, right? So you need to always prepare for these situations. Yeah. When you are young, of course, your risk taking abilities is higher because your financial responsibilities are not so high. But as you progress, towards a family situation, that's where the need to create this emergency fund becomes even more important. Yeah. And what we also always tell is that just do not put this money aside, right? Even that emergency fund should be invested in a very safe, secure investment, which will, of course, not give you very high return, but will also ensure that the money is not losing its value, right? And the goal, of course, from you, for you to take from this, at least this slide, is that the earlier you start saving, the better it is, right? And here's the QR code that I was mentioning. This is the financial template that we share with most of our clients, which helps them do some budgeting and start saving some money. If you are not able to access this QR code, all this file, you could always, send me an email and I'll be happy to share. Okay, then let's go ahead. Now, as far as savings is concerned, there is a very interesting sort of, how should I say, a prevalent belief that, women are not very good at saving. My experience is completely the opposite. I think women are more likely to have a more disciplined savings kind of a behavior or culture, and they usually end up saving more money than men. Yeah. But this is where the situation gets a bit tricky. What women tend to do, or most likely do, is to shove it under the carpet. Well, of course, this is a little sort of a funny pictorial sort of representation, but what it basically means shoving under the carpet in a financial perspective is just let it sit in your bank account. If the money is just sitting in your bank account where it is not earning any return, it is as good as basically putting it on fire. Yeah. This is the simplest thing which all of us can change right now, today. Yeah. Um, and why? Why does this mean that, when you're putting your money, let's say, in the bank account without doing anything, what does it mean that you're just basically putting it on fire? It's simply because of the inflation, right? Now, as the inflation goes, the value of money decreases. Yeah. And in the recent times, it has been quite significant. Just to give you an example, if you've saved $100 or €100 5 years back, right, on the 1st of Jan in your bank account, the current worth of that money is 80 or approximately €82 or $80, right? So if you did nothing with that money in the last 5 years, this is how much you have already lost. Yeah. So, and this is how it becomes interesting when people come to me, like, financial advisor, and say, we are all for investing money, but, we do not want to take much risk. We are fine with low returns. And what I actually tell them that, hey, if you're not doing with anything with your money, you're already losing at least 2 to 3% of it every year. So when you say that you do not want to take risk, this is the biggest risk that you're already taking by putting the money in the bank account, because here it is a guaranteed loss of 2 to 3%. So just to keep the value of this money the same, your money should be earning at least 2 to 3% return on an annual basis. And that is just to sustain the value of money. Now, anything over and above that 2 to 3% is an actual return on investment. Yeah. So think about this. And this is where, the whole, how should I say, the change mechanism can work for you. Once you realize this, that by doing nothing, that's the worst situation. That is the biggest call for action, is to start doing something. Now, when you think about it, is starting to do something, our priorities are different in every life stage. Yeah. And especially when we talk about women, right? When they are single, when they become mothers, or when they are at the later stages of life, our priorities in life change significantly. So accordingly, our financial priorities or financial goals or actions also have to change along with those life stages. Now, since we work with women across different life stages, I've put together some very broad guidelines. I do not know, in this audience, like how many of you are in your 20s, 30s, 40s, 50s, but that's the usual kind of, the ages. So I've put together some financial goals which you can think of for yourself, or at least have some guidance on that these are the topics that you need to already start thinking about if you're not doing that. Yeah. So let's start with the 20s. In the 20s, this is where you are probably just starting to earn money. Yeah. At this point of time, it's about putting the right habits or behavior in place. Yeah. Trust me, personally, as I said, I'm in my mid 40s. Now, when I look back, I think of so many things which I did wrong in my 20s and 30s from a financial perspective. And I always, say, I wish I knew this when I was in 20s. I wish I had done that. So these are the things which I'm just trying to sort of put together here for you guys. Yeah. So budgeting is the first and the most important things that we can start doing on a daily basis. Keeping a very good account of where we are spending money, putting goals for ourselves, right? Okay, I need to save, let's say, at least 30% of my income. How do I do that? Where can I cut costs? And at the same time, start creating your emergency fund. That's the first financial thing that all of us need to do. And if over and above, after creating, let's say, that emergency fund, if we are saving something, then we need to start investing, even if it is small. Yeah, it doesn't matter. Even if it is like 100 euros or 50 euros a month, this is where you can start investing in those simple investments. And one option is the money market fund. So money market fund is a debt fund for short-term debt instruments. It is the most secure kind of investment and also gives low returns. So this is perfect for your emergency fund. Yeah. When you start saving and when you want to create this emergency fund, start putting money in these money market funds. Yeah. And the second thing which you can then progress to are the ETFs. And these are the equity, let's say, funds which track specific indices. They are low cost. They could be mid return, 5 to 6%, but that is where you can start getting a flavor of investing in equity. But one thing, keep in mind that if you have any student loans and or any other kind of loans which you have to sort of think about, this is probably the phase where you can reach out and take some financial advice and in terms of how can I pay off this debt. Should I do refinancing? Should I refinance because probably the interest rates are better now? Yeah. Or am I better off just paying off this debt right now? And depends upon a lot of factors, right? How big, what are the terms and conditions? But make sure that this is also one of your financial priorities, right? As you start saving and as you start investing. So that's for the 20s. Let's say the next stage, right? Probably you have a partner here in the 30s or early 40s even. This is where we remember we said that your savings potential is the highest. This is a perfect time to start saving for the long term, for the retirement planning. I know probably, when you're in your 30s, this is the last thing you want to think about. Yeah. What happens to me when I'm in my 60s or 70s? But trust me, the earlier you start, the better it is. Yeah. The kind of compounded interest rate effect that you can have by investing for 30, 40 years is completely amazing. Yeah. So the earlier you start putting your money or saving aside for the long term for your retirement is probably the best thing that you can do. And at this stage, you can club the goal of doing your retirement planning and your tax savings. Yeah. At least in Germany and a lot of other European countries, there are these really interesting pension plans, private pension plans, when you can invest through them for your retirement, but at the same time, you get significant tax benefits. Some of these investments are completely tax deductible. Yeah. So basically, which means that for, let's say, if you put 100 euros in it, and if your tax class is you are paying 25 to 30%, you basically get that 20 to 30% back in your tax filing. So your net investment is quite low while the returns are significantly higher. Yeah. Another thing, if you already do have kids, you could already start sort of, saving aside something for them. That's another option in case you have them. But what I always say, especially to women, is like they say in your flights, if you have a child with you traveling, you should put on your seatbelt first before put your child's on. So protect yourself first, or start the financial protection for yourself first before you move on to the kids. Yeah. So this is something which is super critical in your 30s. From a investment perspective, right? Retirement plans, like I mentioned, significant tax advantages. You could here, if you do have extra savings, right? You could basically also start looking at a managed portfolio. What is a managed portfolio? Like when you start investing, you could start with ETFs. These are like exchange traded funds, passive investments, And then slowly and steadily, once your fund level moves slightly higher, you could focus on having a proper managed portfolio for yourself, where somebody is guiding you, advising you on what kind of funds you should invest in, what kind of asset classes you could invest in. So this is what I mean by a managed portfolio. Real estate could also be an interesting investment. And at this stage here, I am talking about real estate purely from an investment perspective, not as, wanting to have real estate as a residence, but pure investment. At least in Germany, the investments in real estate are quite lucrative, right? Has a lot of tax advantages. So from that perspective, Germany is also a great place for a real estate investor. So if you have extra funds, again in your 30s, it could be a good idea to start thinking about it if real estate is an important sort of asset class for you, because that ensures that you could pay off all your loans and mortgages by the time you are in 50s or 60s, so much before your retirement. So from a long-term planning perspective, it makes sense. Now let's talk about 40s. Yeah. So this is where I am currently in myself. And I know that at this life stage, when you have kids and all that stuff, holding on to your savings is very difficult. Yeah. So this is something where, people who are in this life stage need to focus on. Um, Continue with the retirement planning. Yeah. So because when your savings are low, you really need to prioritize what is the most important thing, right? So, and you need to channel your money there. Retirement planning is the first goal. The second goal is for extra investments, focus on kids, health and wealth programs, and then start diversifying your assets. Yeah. So diversification of assets here means probably besides having real estate, start thinking about other commodities like gold and silver. Yeah. A lot of us do not know that these kind of asset classes also bring significant tax advantages. Yeah. So this is what I mean by diversifying your portfolio slowly and steadily start moving away from debt, equity, and start adding different asset classes. Then, when you are in your 50s, of course, retirement planning remains a part of your financial goals. Debt repayment is something where you can start thinking about here. Assuming you have taken significant loans, let's say in your 30s and 40s for real estate, this is where we need to start planning for, okay, how am I going to repay, this loan? What do I need to do something with my investments and all? And another thing which comes at this stage is how do you plan to pass on your financial assets to your next generation, right? There are significant inheritance taxes here, gift taxes in a lot of countries, and they can be quite high, right? So you want to find all those tax efficient ways of passing your assets on. Yeah. So that is something which can be a focus here. And last but not the least would be, let's say if you do have created a significant asset base, many real estate properties and asset portfolios, this is also a time where you need to start consolidating. What I mean by consolidating is, in your 60s and 70s, of course, you want to enjoy your life and not sort of, get too much bogged down with these management affairs. So it could be as simple as if you have real estate assets in three geographies, which are the ones to sell off, which are easy for management and all that stuff. So this is what we also do with a lot of our clients in this stage, is to create their assets in a way where they're easy for them to manage in later life. So these were the different goals and priorities, uses of funds. Let's now sort of try to summarize all of this in how a portfolio for a women can look like. Yeah. Um, this is just sort of now a pictorial representation of all the different kind of asset classes we talked about at all different ages. So as we said, in your 20s, you could start with those money market funds, yeah, with a little bit of equity. Then when you are in your 30s, you could start with retirement planning. So this is the retirement planning one. Um, it should continue till the late 60s, right? And then when you have more and more savings over the next, decades, then you start with real estates, commodities, alternate assets. So this is how you can think of. Of course, this is not a specific, um, investment advice, but this is a generic representation of how you should think about creating your portfolios. Um, Now, in the last session, which I actually had, somebody asked me that how is a women portfolio different from a man's? Yeah. Um, Technically, from a financial perspective, there is no big difference. But there are subtle differences which we, or at least I specifically keep in mind when I'm working with women investment. Yeah. What are those specific points? Generally, women have more goal-oriented portfolios, which means that women start with creating a list of financial goals, and all the investments that they do are designed to achieve those goals. Men typically work slightly differently. They look at, okay, which investment or which funds give me the highest return? This is what I want to invest in. So women work slightly differently. Second, and this is, I think, most important, is that, when we look at our careers, our professional life, we always do not have a very stable kind of a continuous sort of a career line. Um, Maybe because of kids, because of different situations, yeah, we can have employment gaps. Yeah. So what we need to think about is to always look at investments from the perspective that they should create passive income for women. Yeah. So this is where choosing the different asset classes makes a lot of sense for women as compared to men, because men usually have a very stable kind of a career line, yeah, for them. Um, when, of course, as I said earlier, women tend to live longer than men, right? And sometimes women are dependent on men for their financial needs because of maybe a gap in their career or whatever. So, what we need to do specifically for women is, even if the woman is a homemaker, yeah, it doesn't have, let's say, a profession which gives her a regular income, it is super important to have a separate retirement plan for her, because she cannot be completely reliant on her partner. And a lot of people do not know that these government pension plans, right, that we have, and this applies for both men and women. If the person who has, let's say, invested in this government pension plan and all that stuff, if he's no longer there, right, his pension can be passed on to his partner. In a best case situation in Germany, only 40 to 50% of the monthly pension which the person who has actually contributed would have or could have earned, only 40 to 50% of it is actually passed on if, to the partner, if he is or she is no longer there, right? So you really cannot rely on your partner's, at least the statutory pension, and which is what most of us have. Most of us do not have private pension plans, and we are relying on the public pension. So this is where there is a significant risk that if you do not have your own private pension plan, right? If you are relying on your partners, because most likely as women, we tend to outlive our partners. Yeah. Last but not the least, again, probably because of the hesitation, right? Because of the lack of knowledge, women do not ask for investment advice. They do not ask for expert tax advice for these things. Yeah. So this is something which is so critical, is that there is this inhibition to go and ask. Yeah. Because of this reason, for us, it is super important for them to be able to have access to all the investment resources. Yeah. So this is how 3 or 4 ways in which, at least when I am working with a woman and creating a portfolio, it tends to be different than what it would be for, let's say, a family or for a person. Now, let's talk about the big what ifs, right? We talked about creating an investment portfolio, which is great, but at the same time, there are these significant risks that what we are all exposed to. Yeah. So, how do we manage these big what ifs and risks? This also, I try to sort of identify by different life stages or age brackets that these are the things where you should be thinking about. Like, this is the right time to think about these what ifs. Yeah. So when you start working, right, probably as I said, in your early 20s or something, the most important asset that you have at that stage is yourself, is your earning ability over the next 40, 50 years, right? Because your financial success basically depends upon your ability to work and earn money. Now, this is the most important risk where when you start sort of your risk management plan that you can look at is to um, sort of safeguard those situations, let's say, where you are not able to earn money, either because of some accidents or because of some health issues. And this disability or this inability to earn income could be temporary, could be a few months, or could be for, years, depending upon the situation. So this is the first thing that what you can think about. At least here in Germany, we have these disability insurance plans, right? If you are not able to work, um, at least 50% of your physical ability is not there to, work 40 hours a week, then you have a fixed monthly income coming in. So these are the kind of risk management plans that you can think of when you're in your early 20s. And remember these disability plans, yeah, they how much you need to pay for them, whether you get access to them, completely depends upon three things. Yeah. How young are you? So the younger the better, yeah, because your chances of being in great health is higher, right? Of course, your health situation makes a lot of difference. And lastly, what kind of job you are doing. So these three things combined determine that what kind of disability insurance you get access to and how much do you have to pay for it. Therefore, the earlier you start with these things, the better it is because you get into the system and you do not have to pay a significant amount. Then in your 30s, if you have a need for, let's say, a better health coverage, here I basically mean, let's say, a private insurance plan, yeah, or you want to have specific requirements or special savings for the long-term care, yeah. So this is the time where you need to sort of start getting those things because, as I said, the same rule applies here. The younger you apply for these things, the better it is. Again, especially for women. Why? Because let's say when they become pregnant or after kids, right? They are at a risk of developing some health conditions, yeah, as a result of pregnancy or probably in later ages because of other things, hormonal changes and all that stuff. So the earlier you get these things done, the healthcare related, the better they are, yeah. And of course, you have to pay lesser for them. And then, of course, in your 40s, this is probably when you have kids and when you have started taking, let's say, some loans, financing for building assets, real estate. So when you have some liabilities, significant amount of liabilities, then the need for health, for life insurance comes in. Because, okay, what happens if you're no longer there, right? So your family should not be burdened with significant financial liabilities. So this is where life insurance comes in picture. So that's something to be considered. And then, of course, in later stages, and of course, this is not late. I mean, you could do this in your 30s and 40s as well. There is, it's not too early, but creating a will for yourself, right? How do you want your assets to be passed on? Or if you want to create a special trust for something, a financial trust for your child, probably, right? You're saving some money and then you want to put it aside and you want to have somebody assigned as a trustee that if something were to happen to me, this money has to be used for my child benefits, and this trustee should be able to sort of make financial decisions for that trust. So all of these things can be done earlier as well, but then if you have not done it, then probably 50s is a good time to do it. And at the same time, passing on your assets. This is what estate planning is all about. Um, Using the most tax efficient ways to pass on your assets to your kids. Yeah. The earlier you start here again, the better it is. So these are broadly, the main things that we can think about. But besides that, the basic risk cover, which is to get, those basic insurances like Privat Haftpflicht, this is the liability insurance, accidental insurance, legal insurance, Hausrat insurance. This is super important. Yeah, I'm not even talking about this because I consider them like those critical basic insurances which all of us have. I wanted to refer to only these specific ones which women should think about at different life stages. Yeah. So this part takes care of our risk management part of the whole financial planning. Yeah. Now, two special situations I want to talk about. I'm not sure if any one of you is currently at that situation, but again, from my personal experience, um, single moms. I happen to work with a lot of single women, and some of them are single moms or probably are going through a situation where they are, separating from their partner. So I usually help them do this financial transition. And I think this is so important for women who are especially in this situation, who are already doing such an amazing job, right, in their personal lives, to have proper financial guidance to overcome these kind of challenges, right? So again, something which I want to share, the four important things, if you are already in this situation or if you are transitioning to this situation, what you can do. The first and the most important is again budgeting. Um, Imagine a situation where this is a lot of my clients are when you are as a family unit and you're moving out, right? And you're becoming a single parent with a child, your whole financial situation changes, right? So you need to start from the scratch. This is, again, not a great thing, but this is something which you need to do. Again, start, looking at, okay, how am I going to spend my money? Every euro has to be accounted for. Set goals for yourself, savings, because they're going to be extremely difficult at this situation. Again, going back to the basics, do you have an emergency plan set up for yourself? Super critical. Yeah. And then comes the insurances. Now, in this situation, when you are as a single parent, your financial assets are usually limited, right? At least for a certain time period. So, which means that you need a strong insurance cover that in case some unforeseen situation happens, right? It should not impact your standard of living. It should not impact your daily finances. So having a good insurance cover is the most important thing, which, as a single parent or a single mom that you need to have. Again, once you have, let's say, overcome this initial stage and you've done all of these emergency fund insurance covers, start saving for your retirement. Even if it is 50 euros a month, even if it is 100 euros a month, super important. And after that, for your kids. Of course, the second parent would be contributing to it. And, I'm not denying all of that. But doing your own planning, first for yourself, and then starting with the kids is super important. And last but not the least, again, here, tax consideration, real estate planning, especially, as a single parent becomes very important. So these are again, a lot of basic things, but not all of us do these basic things when, we are in this difficult situations in life. So just a simple reminder, again, basic things have to be redone if you are at this stage of your life. And second thing, planning for your retirement. We talked about this a lot in our earlier slides at how you can start investing and all that stuff. But rarely, I mean, how do you deal with this topic? And this is purely how I always work with my clients when they say, okay, I want to start with my retirement. So this is sort of the framework that we use, right? So there are two questions you need to ask yourself. How much do I really need to sustain a decent standard of life? And the answer to this basically depends upon when you are going to retire, where you are going to retire, and what kind of standard of life you have, right? But remember, here we are talking about sustenance, how much is really, really needed. Usually, and again, this is a rule of thumb, can be different for a lot of people, is that at least in Germany or in other European countries, what you should be minimum target yourself is to have at least 4,000 euros per month. And this is before taxes. Yeah. Remember all the pensions that you can expect to receive, whether it is from government pension plans or from certain private pension plans, they are all taxed. Yeah, this is not tax-free income. So consider the fact that there will be at least 20-25% minimum tax rate, which means you will ultimately get 3,000 euros per month. And that is the basic level that you should be targeting to achieve. Now, how to generate this 4,000 euros per month? Yeah. Three things which you can think about is, of course, if you are employed, yeah, you would mandatorily be contributing to a public pension fund. So that is the first thing. But in a lot of European countries, especially Germany, the kind of pension that you can expect from the public pension funds, when you are retiring, when you are in your late 60s or 70s, it's going to be lower and lower. Yeah. So the whole pension situation does not look good. Yeah. So what you need to start doing for yourself is to start saving separately in some private pension plans, which I mentioned earlier, right? As a part of your investment portfolio. If you have invested in real estate, so rental income could also be a part of it. So this is where the real estate part of your investment portfolio comes in. Yeah. And here I just wanted to give you a quick idea that how starting this whole concept of when you start earlier, the better, right? How it makes a lot of difference. Let's say if you start contributing 200 euros a month to all of these things, yeah, when you are in your 30s, the asset value or the asset that you can build at the age of 60s is approximately 200,000. Yeah. If you were to start in 40s, it goes down by half. Yeah. It goes down to 100,000. And then if you start, of course, very late in your 50s, it goes down to 50,000. So you can see a matter of 10 years, which is a huge amount when it comes to your investment behavior, makes so much of a difference, right? So that's why we say the earlier you start planning for your retirement, the better it is. So 30s, 20s, 30s is the ideal time to do that. Now let's look at the second part, right? So the first part is just basically ensuring that you will lead a good standard of life. But then, we always want more, right? Because we have worked all of our lives and then we want to enjoy our retirement. So then comes the question of, okay, how much do I really want? So this is for, traveling the world or saving for your kids or, probably doing charity, all the good things that you want to do for your life. Uh, Over and above this 4,000 euros a month, all the other, let's say income or the profits that you can generate should be through all of these other investments that you have made. Whether it is investing in funds, we talked about ETFs, active funds, there are different kinds of funds across all asset classes that you can invest in. So all the investment portfolios that you create should be for the enjoyment, for, the more part. The basics, the basic standard of living and retirement should be covered by these three because they guarantee a specific monthly income. And as I said, all the other assets that you build, they should be basically for your wealth creation for your later stages, not from a risk management perspective. The first is the risk management perspective. The second is for the wealth creation. So this is how we usually start planning for retirement. First, we take care of this because this is super important. Once this is taken care of, then we start working on this part. Yeah. Now, this is basically in all the important topics relevant for women, how to do it, some guidance which I sort of wanted to share with you guys. And just as a last sort of a guidance, how we usually help, or if you need any help, what we can offer you. So we basically do whole 360-degree financial consulting, which basically means including all topics, whether it's investment. So this is here we talked about. So we can facilitate investments for our clients across all asset classes. We do professional management, and we do not have any minimum capital requirements, right? So it's not like, I mean, I manage investment portfolios, even if my clients are investing 100 euros a month. Yeah. So the amount is not important. What is important is to understand what are their goals and how we can achieve those goals. We also do, of course, retirement planning is a super important part. Risk management, we can help our clients get whatever insurances they need, whether it's health related, whether it's general. Real estate, we also facilitate real estate investments for our clients. Financing we can get done. This is basically, whether it's real estate financing or any other kind of private debt, we have access to over 200 banks who we can take funds from. So it's good. And, financing is just the start of it, but we can do the whole debt repayment management just to ensure that, everything is kind of taken care of by the time they hit their 60s. So this is about our services, and there is no standard products that we offer, right? We are a financial advisory firm, and we offer our customized service, depends upon the client needs. There is no one size fits all kind of a solution which we offer. And last but not the least, then the clients ask me, okay, so what do you charge our clients? We do not charge any hourly or retainer fees. We get paid on a compensation-based model where you, the ultimate customer, do not pay us. So we do not charge our clients, but we charge the financial service companies which help us in creating these strategies. So for example, if you were to facilitate a real estate financing, from a bank for you. So we get automatically paid from the real estate financing institution, but not you. For you, the cost remains the same, whether you go to any bank directly or you go through us. So there is no additional financial burden for our clients. Yeah. So this is just to summarize how we work. Our most important goal is to support the people that we really work for in every way in helping them achieving their financial goals. And that's what brings us, trust me, the biggest satisfaction, work satisfaction that we get. So this is about the whole session. I was recording. I can stop recording now, because now if you want to ask any questions, please feel free. The recording has